Listen, President Trump just realized what I've been telling you for 10 years. The world is turning away from financialization into hard assets. And he's been signing executive orders ever since he took power to secure critical minerals and mining. The United States just announced a 12 billion critical minerals stockpile to counter China's dominance. And if you got shaken out of your silver and gold positions during last week's crash, you just made the biggest mistake of your investing life. I'm Kevin Hu, and what I'm watching right now is the beginning of the greatest commodity bull market since the 1970s. Trump understands it. China understands it. The bankers are desperately trying to suppress it. And most retail investors are getting shaken out at exactly the wrong time. Before I show you the charts that prove we're only at the beginning of this bull market, before I reveal why silver miners are at historic lows versus bullion, creating the setup of a lifetime, I need you to understand something. Physical supply is the underlying reason silver has done so well in the last 12 to 13 months. And the volatility we've seen these last few days was just noise. Big players defending their paper positions while physical supply continues shrinking. Now hit that subscribe button, smash it, because what I'm about to show you is long-term chart analysis that proves we're in the early innings of this bull market. Not the end, the beginning. And if you understand Jesse Livermore's wisdom that the best trades belong to the most patient, not the cleverest, you'll position yourself for massive gains. And while you're at it, hit that like button and drop a comment telling me if you held through the volatility or if you got shaken out, because that tells me if you understand the difference between paper manipulation and physical fundamentals. Let me start by showing you the proof that last week's crash was pure manipulation. Someone noted that the volume the other day was so huge it corresponded to approximately 2 times the annual production of silver globally. Think about that. In one day, they traded paper contracts representing twice what the entire world produces in a year. How do they do that? The contract size for silver futures is 5,000 ounces, so you can trade as much as you want, especially if you have deep pockets like the bullion banks. They create unlimited paper contracts for metal that doesn't exist. That's the game. That's how they suppress prices. Unfortunately, a lot of people probably got shaken out of their silver and gold positions these last few days, especially people who use leverage to buy instruments like ETFs, futures, options, instead of actual physical metal. I really think that's a silly thing to do in this massive bull market. We're just beginning, and I'm going to show you charts that prove it. As Jesse Livermore once said, arguably the greatest trader ever, be right and sit tight. He also said, the best trades, and by trade, I mean long-term positions, not day trades, are not taken by the smartest or cleverest people. They're taken by the most patient. I think that wisdom is still paramount in this precious metals bull market. You need to be right about the fundamental thesis. Physical supply shortage, monetary debasement, dollar losing reserve status, China accumulating, Trump securing strategic minerals. These fundamentals are correct. And then you need to sit tight through the volatility, through the paper market manipulation, through the margin hikes and circuit breakers and coordinated attacks, because if you're right and patient, you win. If you're clever and active trying to trade every move, you get destroyed. Now let me address the mainstream media narrative. The Financial Times just came out with a silly article about silver. They're saying it was the retail crowd that created the massive move in silver price. But for those of us who've been following what's going on with silver supply, with all the silver taken out of vaults at COMEX, Shanghai, and LBMA, we know this is much more than retail. They're trying to paint a picture that this move is over. Let them do that, because they did the same thing in 2004. They said gold was finished, that it was pointless to hold it. That was an editorial from them in 2004 when gold was at $400 per ounce. So read the Financial Times, read the Wall Street Journal, read Bloomberg at your own peril. I noticed the bullion banks were heavily involved in the paper attack on silver and gold in the last few days. But I also see JP Morgan is still calling for $65,000 gold before end of this year. And I think they're going to be wrong about that. They're going to be too conservative on their price target, because what's really happening, and we've been telling you this on my analysis for years, there's a war for commodities. Now, we covered this almost 4 years ago. There's a guy from within the mainstream who worked for the New York Fed and Credit Suisse, Zoltan Pazar. Very clever analyst. He was telling us that with BRICS, with the world breaking up, with the war in Ukraine, commodities are going to become hot items. And commodities are really important, critical minerals, rare earths for the technologies that are coming. Not just AI, but electrification. You need these rare minerals and rare earths. And for the past 30 years, with globalization, the West has dropped the ball. They allowed China to become the dominant force, not just in producing rare earths, but processing them into finished goods. Now the US has realized this. President Trump has realized this, and he's been signing executive orders ever since he took power to secure critical minerals and mining. The world is turning away slowly but surely from financialization into hard assets. This was announced yesterday. U.S. to launch $12 billion critical minerals stockpile to counter China's dominance. U.S. Export-Import Bank will provide $10 billion in debt financing for effort named Project Vault. They mention metals like copper, rare earths, lithium. They don't mention silver much, but if you go back to November 6th article, it says U.S. adds silver and copper to critical minerals list. Why don't they mention silver that much? Because silver is a really important strategic metal, and it's becoming a monetary metal as well. Silver is both industrial and monetary. That dual nature makes it more dangerous to the paper money system than gold. So a lot of people got out of their gold and silver probably in the last few days, maybe even miners. Even though President Trump is going to provide financing through Export-Import Bank for mining, it's hard when the market is volatile. People get out. Then the market rebounds so quickly it's difficult to get back in. As I said earlier, be right and sit tight. There are people who say you have to hedge your portfolio. No, that's for professionals. That's what hedge funds do. We as investors do our homework, do our research, decide what we want to do, and sit tight. Get through these ups and downs without being shaken off. If anything, we add when we see these shakeouts. Now, let me show you charts that prove we're only at the beginning of this bull market. I'm looking at a quarterly chart of gold going back to when it was fixed at $35 in the 1940s. You can see the breakout we had in January of last year. We broke out of the trend line and it's taken off since then. The correction we've seen recently doesn't even show on the quarterly chart. It's that insignificant in the bigger picture. If you look at the bull market from 2001 to 2011, that was a much longer bull market than what we've had so far after the break of this line. And look at the bull market in the 7s. We're just in the beginning. Let's move to silver. Silver has taken off a little later than gold. It trades differently. It's been suppressed a lot longer, but here's the quarterly chart. There's still a lot of room for silver to move higher. The chart could look a lot more bullish, but it's already bullish. If you look at what silver did in the 70s and the breakout we have now, we're still only in the beginning. We could go to much higher levels in silver. A lot of people are going to come in late. They'll get shaken off. They'll never get into silver again, but you need to hold like a rock. Be like the rock of Gibraltar and let the market waves hit you without reacting. The waves are the volatility. Now let me show you something really important. Even though silver miners have done well, they've massively underperformed the bullion. If you look at SIL, which is a silver miner ETF versus silver bullion, we're at very low levels historically. Recently, we hit the lowest level ever since this ETF has been published. That was January 26th, about a week ago. Even Tavi Costa, who I follow closely, noticed this and posted about this ratio. What does this mean? Silver miners are cheaper relative to silver than they've ever been. When this ratio is at historic lows and silver is in a bull market, what happens next? Mean reversion. The miners catch up explosively. This is the setup of a lifetime for silver mining stocks. But you need patience. You need to hold through volatility because when this ratio reverses, and it will, the gains in miners will be spectacular. Let me show you where markets are. As of 8 a.m. London time, gold is actually up $256 It's at 49.15. The high has been 49.34. 5,000 is really the key now. If we can get back above that level, we'll see if the paper market allows it. There's still a lot of water to go under the bridge. U.S. markets haven't opened yet. Silver is at 86.50. It's up almost $7, nearly 10%. I wonder if they're going to use circuit breakers to stop silver trading if it goes up more than 10%. They probably will. When silver falls 12%, they don't stop it. But if it rises 10%, suddenly they find the circuit breaker button. The high has been 87. The rest of markets are very quiet. Stock market indices aren't doing much. Currencies are slightly stronger versus dollar, but nothing dramatic. This tells you something. The precious metals move is independent. It's not driven by stock market sentiment or currency fluctuations. It's driven by physical supply shortage and strategic positioning by nations who understand the dollar's days are numbered. Now let me explain why physical supply is the only thing that matters long term. Paper markets can be manipulated. Margin requirements can be changed, circuit breakers can be triggered, contracts can be created unlimited. But physical metal is finite. There's only so much that can be mined. There's only so much in vaults. There's only so much available for delivery. And when industrial demand plus investment demand exceeds available supply, price must rise regardless of paper market manipulation. That's what's happening in silver. Industrial demand from solar panels, EVs, AI data centers is growing. Investment demand from people who understand monetary debasement is growing. Central bank demand for physical metal is growing. And supply from mining is constrained because it takes 16 years on average to open new mines. This supply-demand imbalance is why silver went from $18 to $120. This is why the crash to 75 doesn't change the fundamental thesis, because the supply shortage hasn't been solved. Industrial demand hasn't fallen. Investment demand hasn't disappeared. What's significant about Trump's $12 billion critical minerals announcement is it confirms what we've been saying. Strategic minerals are essential. China has dominated for 30 years. America needs to secure supply. This isn't rhetoric. This is policy backed by financing. Export-Import Bank providing $10 billion in debt financing means serious money going into mining, not just talk, actual capital being deployed. This will take years to develop new supply. But it confirms the government understands we're in a commodity supercycle. And silver being added to the critical minerals list without being prominently mentioned tells you how strategic it is. They need it. They can't publicize it too much because that would drive price higher. But they're securing supply quietly while suppressing paper price through COMEX manipulation. This is your window. The gap between government recognizing strategic importance and public realizing the same thing. That gap is where massive gains are made. Let me tell you what separates winners from losers in this bull market. Winners understand long-term fundamentals and hold through volatility. Losers try to trade every move and get shaken out at bottoms. Winners own physical metal or mining companies directly. Losers trade leveraged ETFs and futures and get margin called. Winners add during crashes when fundamentals haven't changed. Losers panic sell at bottoms and buy back at tops. Winners understand Jesse Livermore's wisdom. Be right and sit tight. Losers think they're smarter than the market and try to trade every fluctuation. Winners recognize paper market manipulation and ignore it. Losers think paper price represents reality and make decisions based on temporary distortions. The greatest wealth transfers happen during bull markets when patient holders accumulate while impatient traders get shaken out repeatedly. We're in that phase now. The question is which side you're on. Look at the quarterly charts again. Gold breaking out after decades of consolidation. Silver following with even more upside potential. Miners at historic low ratios to bullion. These are not signs of a bull market ending. These are signs of early innings. The 70s gold bull market lasted the entire decade. The 2000s bull market lasted 11 years. This bull market started breaking out in 2024. We're barely 2 years in. If this follows historical patterns, we have years of gains ahead. Yes, there will be corrections. Yes, there will be volatility. Yes, paper markets will be manipulated. But the fundamental drivers, debt explosion, dollar losing reserve status, China accumulating, physical supply shortage, these drivers are strengthening, not weakening. Let me give you my honest assessment. After 10 years analyzing these markets, we're at the beginning of the greatest commodity bull market since the 70s. Trump's critical minerals stockpile confirms governments understand strategic importance. China declaring yuan reserve currency ambitions confirms dollar dominance ending. Physical supply shortages in silver are real and worsening. Industrial demand is growing. Investment demand is growing. Central bank demand is growing, and mining supply is constrained. This imbalance drives prices higher regardless of paper market manipulation. The crash last week shook out weak hands using leverage and trading short-term, but it didn't change fundamentals. If anything, it created buying opportunity for patient investors who understand where this is going. Silver miners at historic lows versus bullion creates once-in-a-decade setup. When this ratio reverts, gains will be spectacular, but you need patience to hold through volatility and wait for mean reversion. Don't get shaken out by paper market manipulation. Don't sell physical metal during engineered crashes. Don't trade leverage when you should be holding long term. Be right about fundamentals and sit tight through volatility. Now, I need you to do something for me. If this analysis has opened your eyes to why we're just beginning this bull market, if you understand now why Trump's critical mineral stockpile confirms the commodity supercycle thesis, I need you to hit that like button right now. I need you to subscribe if you haven't already, and I need you to drop a comment below telling me if you're holding through this volatility or if you got shaken out, because that tells me if you have the patience to be a winner in this bull market. Share this with anyone who sold during last week's crash. They need to understand this was manipulation, not fundamental change. Physical supply shortage continues. Strategic importance is confirmed by government policy. The bull market is intact. Be like the Rock of Gibraltar. Let the waves of volatility hit you without reacting. Be right and sit tight. That's how fortunes are made in commodity bull markets. The impatient gets shaken out. The patient get wealthy. Trump just launched $12 billion for critical minerals. Silver is on the list, but not publicized. That tells you everything about strategic importance. Position accordingly. Your move